For traders that have emailed and asked, the links for the free downloads are in the description box below. Just click on the link or copy and paste and put that in your browser. The 4-step method to high performance trading and the 7-step daily routine for high performance traders create the rituals, the mindset, and the winning attitude to master the markets. Bulletproof yourself with your daily routine and your habits. Force yourself to be getting better, 1% better every single day. How good can you get, traders? Again, the free downloads, the links are down below. They're both free courses. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Reviewing the high and low today. Lots of questions about the high and low. We talked a couple things yesterday about timings, levels, and setups, and also why I don't use indicators, which a lot of interesting feedback and comments. And the number one thing, as I've always said, is whatever you do, if it works for you and it makes money, then keep on doing it, because everything else it doesn't mean anything. But coming back to some simple things and what Van Tharp talks about, you trade what you believe. So if you believe that the indicator is giving you something or giving you an edge, then use it by all means, because it's your interpretation of the market that allows you to either profit or lose, I suppose. So coming back to timings, levels, and high and low of the day, day one, day two, we saw some great day two trades yesterday, some with continuations and some reversals. But understanding Monday, Tuesday forms our initial high and low of the week. And so in many cases, one of these extremes will hold for the rest of this week. And coming back just to some simple things, we have a high, just reinforcing. When I come into a session, I'm looking for a setup. Everything else over here to the left doesn't mean anything. So people, one of the comments was, the RSI was here and it was divergence for 4 days and all that. It's like when I come into the session, I'm looking for a setup based on that day and that week, because the rest of it's an illusion. Now, obviously, there may be larger opportunities, week 1, week 2, week 3, those types of setups, but that will coincide with the setup in the session itself. So if you're down low, day two, I talked about this, day one runners, typically, if depending on the nature of that pattern, if you're looking to counter trend that, you have less degree of success on that day one, because remember what that day one can be doing. It can be putting in the extreme or establishing the range, the trading range for that day and the week. And that may actually be eating back into a profitable trade or expanding the range of an existing trade. So we have day one on Monday, and I've talked about this on day two. So we have the previous day's low, but understand that when they go through that low, that just tells you that that low is not in place yet. They're continuing to move lower. So now we have a low. And I mentioned in a previous video a few days ago, when they break that low or a high, a peak formation low, not just a daily low. So now we know what there's other time frame traders in the market, but now we have a peak formation low and a peak formation high in the Asian session. There's our 3-hour high low. When they break that in the Europe window, we now know there is money at the high. When that's broken, there's money in the market. They pull back and continue to work into the low. So people have asked, what do you mean by working the high or working the low? When they're working into the low, traders are trying to counter trend this. The low's not in place yet. So I talk about letting the sessions trade and coming to the US, and sometimes it can be a US Asia setup for a London trade. Obviously there was a short trade for traders who were shorting this down low with the trend, continuing to trade that into the low, but understanding that as you trade that lower and lower into those peak formations, you now could be getting caught into the short squeeze. This is the short squeeze setup, trading into the low. The 3-hour high low is in place. Okay, we have a lower high. They come back one more time on a third push. This is a 15-minute chart in our gap time. And you've heard me say that middle hour in the gap will often be where the peak formation high or low of the session is put in place. We're down low, it's day two. We're at the low of the day, the low of the week, the low of the session. We get a reversal trade opportunity in the U.S. session in the first hour. Now, again, currencies will move in this first hour, as will gold often. And sometimes we will see a pullback or a retest in that New York Open. But indexes, oil, gold, more specifically, will react to that equity market open. Some of the major pairs, Canadian dollar, obviously it has an affinity with that U.S. and Canadian market trading times. The euro, the pound may also react. But in this particular case, we've got 3 pushes into a low. 3 pushes into a low, low of the week. Day 2, remember, day 1, day 2 will typically establish the high and the low for the week. The high and the low for the week, meaning that this may now be the beginning of a run up. I don't know. We have first green day. No idea what it's going to do. They may work into the high day 1, day 2, day 3 and roll over on Thursday or Friday and come back down to the low of the week. Or we may now be in the beginning of a pullback for a continuation back towards the high of the week. First green day, a low of the week, buy, a low of the day, low of the week, buy low, 50 pip trade on the euro in the US 12 candle window. British pound gave a very, very similar identical trade setup. So somebody again mentioned that 4 days down, the RSI was down or something, I don't know. But remember, Monday, there's your high. Let me just put my weekly line on there. And by the way, I've had some traders share some indicators with me, which I will post in the description box. Thank you for doing that. But look at Friday, Monday. So we have peak formation high in London. They come down in the US window. This is the low of the day into the close of the week. But that is also the low of the US session. And a high. They make a lower peak formation high. There's our 3-hour high low. They work back up into the high before proceeding down on Monday and closing as a down day. That's our peak formation high. Peak formation high on a Monday, coming down into day 2, continues to expand the range lower. Remember what I said, this is the low of the day, but obviously the low is not in place yet. They're continuing to go lower before putting a lower low in the Europe-London window, and then trading back into that low for the short squeeze. And again, pay attention to numbers. Okay, the peak formation on the smaller time frame is below the quarter level. So there's nothing hindsight here, because here's where I'm trading. Coming into the US window, I'm looking for the buy low or the sell high. So understand, day 1, day 2, there's our high and our low for the week. One of these is going to hold. Mark my words. So we have first green day on the pound. Now this has a fairly high close. We can see this pull back for 3 levels into the longs from the US session before resuming the uptrend. Or again, will they work back up into the high and potentially roll over or continue to trend? No idea. But I know that there was a buy low opportunity, low of the day, low of the week at numbers at the beginning of the 12 candle window. And again, that's irrespective of any indicators or anything else. There's a high and a low of the day. They traded back into the low right at the 12 candle window for a short squeeze and a vertical 75 pip trade back to the high, funny enough, of the previous US session. So high of day was put in the US. The low of day was put in at the end of the London window heading into the US session. Session 1, Session 2, Session 3 for the explosive move back up. So again, tying in 3 sessions for the trade setup. Now, some traders also shorted gold. I had the gold trade in the London window. And coming back to some very, very simple concepts. Again, same idea. Peak formation high in the US session, they traded back up into the high and put a peak formation in. That tells me that the quarter level could potentially be a selling level. We have the peak formation low heading into the close down at the quarter level at 75 below the double zero. So now we have a 50 pip box. Now we're inside, but as I mentioned yesterday, for traders who wanted to take that long, it was right at the beginning, the short squeeze of the second hour. Now notice what they've done. They've traded down and creeping trend into the low that gave a setup on the 1 minute chart. So trap volume down in the lower box, go vertical, trap volume in the upper box. Okay, but when you realize what they've done is from the previous night's close, all they've done is gone up 3 levels. Level 1, level 2, level 3, peak formation high, dropped it down into the lower box in the middle, consolidation. We talked about this yesterday. There's a 25 pip consolidation. They've triggered shorts and gone vertical, back into the high at the round numbers, a quarter level above double zeros. This is the pump and dump pattern. Pump, pump, pump. Europe open, pump. The high's locked in. The high's over here. They've traded back up into the high on level 3. London opens, puts a smaller peak formation in place into the high, above zeros. Remember, it's numbers. I want to get filled above the numbers. Once they have locked this in, I'm getting in. That's it. I don't sit there and focus on the candles. And that's where traders are getting trapped. They're getting caught following other things and following price. This is at the beginning of the London session. Where are they going? They're going back down to where the pump and dump began. Pump. There's my minimum target. The average stop hunt, you've heard me, and I'll repeat again, is 25 to 50 pips. They put 25 pips into the longs from the short squeeze in the in the Asian session, but we're in level 1 now. Level 1, level 2, level 3, they trade back down to level 1. Pump and dump, that's all that was. Some traders also nailed the crude trade, the oil trade yesterday. Whether you traded West Texas or spot crude, doesn't matter. And again, just come back. This is the first thing I do. Peak formation low, U.S. session, peak formation high. That's the high of the day. That's the low of the day. The 3-hour window, they extended out further in the U.S. window Monday night. Just put our weekly separator line on there. Okay, peak formation low, U.S. session, they extended out, 1 push, 2 push, 3 push, peak formation high. There's my high and the low of the day. Now, I know traders keep saying, but that's not the high of the day. That is the high of the day. The U.S. put a high in place. That's the high of the day. They come down inside. They're back inside now. So traders are trading the high and low in session, which, as I've mentioned, if you're doing that and you have a setup, no problem. If you have a setup, but be aware that you're inside. They consolidate the volume inside. So we talked about the matrix, and some of these ranges are large enough that there are 25, 50 pip impulsive, explosive moves that are great setups. But the larger setup now goes right before the U.S. session. They go vertical through the high, peak formation high of the day, back into traders who were short in that London window on Monday. So coming back to timings now, we have a market that has gone through the high of the day in that first hour of the U.S. 12-candle window. Some of the traders nailed the short trade in London, 75 pips, great trade. Now we'll look at that because, again, I want traders to understand pump and dump. There is nothing new under the sun. We have a consolidation. There's a high and a low in Asia. It's just that's just as basic as you can get it. We can even move this up, tighten that up onto the Asian low, okay, and then we'll tighten this down. And look at the numbers. You're essentially in a 100 pip box. What do they do at the Europe-London window? They go vertical to the high of the day. Now let's zoom in. The high of the current day. 1 push, 2 pushes, 3 pushes, break down above the numbers. So some traders shorted it up at 50 on the way back down. Other traders shorted it above the quarter level after they broke down for a vertical 75 pip trade that was over in less than 15 minutes. So contrary to popular belief, you can work 1 hour a session and maximize that opportunity. Now coming back to the US window, traders who, again, come back to that basic thesis. The first hour puts a high and low in place. Now, some traders shorted the high of the day on the breakdown back underneath 75 into 50. So for traders who have asked to gain sweet spot settings, whatever index, oil, commodity, whatever you're trading, I use the major quarter levels, and all that is on your sweet spots indicator, you can add or subtract a 0. When I go down to the 1 minute chart during the session, I will add a zero, or reduce it by a zero to have the 100 pip box in place. On the 15-minute charts, I have major quarter levels. But coming back to the New York Open, so if traders waited for that full hour for the New York Open, again, they come back up in 3 pushes back up into the shorts that shorted it at 75, and traders may have taken that vertical move, but the smart trade, the locked-in trade, was the pullback to the to the double zeros back inside the high of the day. Now that's a little bit different setup, but again, the opportunity for traders in that first hour, if they shorted the breakdown after the peak formation stop hunt, or in the New York session back up into the peak formation reversal at the high of the day, the safe trade is at the end of that first hour into the second half hour of that third window for the double zero trend trade back down to the low of the day. But the London trade coming back, and again, just look at this pattern. Pump. It's a pump and dump, back up into the pump. Whenever they go peak formation, don't counter trend the peak formation. You'll notice this pattern. If we just zoom in, this is a reverse half Batman. This is a reverse half Batman. It's the same thing. It's a reversal pattern. It just turned sideways. There's the ear, there's the side of the head. But the pump and dump in the Europe-London window is textbook perfect. Outside, they go outside to the high of the day, lock it in 3 pushes for the vertical explosive move back down to the low of the day. So master the high and the low, traders. Timings, high and low of the day, levels, entry, stop loss, and target. Keep it simple. Have a great day today. Again, thanks for a ton of feedback. Make it better than yesterday. How good can we get, traders? And may the markets go with you.